Happy Friday. If you're waiting for mortgage rates to crash before taking action in the housing market, this week showed stability may be more meaningful than that of the big swing. So let's dive into this week. This morning we kick off pricing on a well-priced 30-year fixed at 6.21, effectively unchanged from last week's 6.20. Jobs data came out this morning with the all-important Bureau of Labor and Statistics jobs report, which typically takes center stage in this recent round of events. And yes, it had some impact, but there we saw unemployment decrease from 4.6 to 4.4%. Headline number, new jobs created. Market was expecting 60,000, yet we saw 50. Typically, that would have some impact on mortgage pricing. And yes, we're feeling it a little bit this morning, but the big news came yesterday, late in the day. Current administration announced that they are planning and have given their representatives at the government-sponsored enterprises, Fannie Mae, Freddie Mac, to purchase $200 billion worth of mortgage-backed securities, a form of quantitative easing, something that the Fed did during the COVID era, during the dot-com crash, during the financial crisis. Now, why that's important and why we saw in overnight trading in mortgage-backed securities a sharp rally upwards, improving interest rates, and again this morning, despite the jobs report landing. What this tells me and what this tells the market is affordability still holds center stage. Mortgage rates, yes, are undoubtedly higher than we would like, coupled with housing still performing at an incredibly well level. What is going to move the housing market, as we've seen in cycles past? The cost to borrow needs to decrease. So here, where yes, we're seeing incremental moves with market trends, market data, inflation, jobs, action such as this with the purchasing of mortgage-backed securities should and will fundamentally drive the cost to borrow lower. Now, with that, we start this year off in a significantly better place than we did last year. As I shared last week, the 30-year fix this time last year was sitting over 7%. This morning, just over 6%. Significantly better opportunity for our buyers, sellers, and anyone thinking of entering the market, because ultimately, as I mentioned earlier, affordability is key. The opportunity to purchase with lower costs to enter will, in fact, move the needle. Now, if you're planning at any point throughout this month, this week, this year, to make decisions to buy, sell, get into the market, planning and executing in advance is critical to your success. It's not about timing the market. It's about understanding what it means for you. Now, if you're running into situations where you need guidance, my team and I would love the opportunity to support you. As always, let's make it a fantastic Friday and an even greater weekend.